So since time immemorial, I'll go back a bit in history, talk like a professor for a bit. Money has been understood as a medium of exchange, right? But it has always continued to evolve. So if you talk to different people, over a period of time, it has been seen as a store of wealth, an enabler of speculation. The cause of wars, but the enabler of peace. A source of social and economic inequality, but equally a measure or an enabler of social reform. Of late, there's also been a new development of digital and crypto forms of money. And some people are calling it smart money because now you can actually use technology and smart contracts and enable predetermined objectives to be met. But as we get into high levels of speculative overdrive around some aspects of cryptocurrency and NFTs, some people are calling it the bigger fool theory. So no paucity of divergent opinions there, and it'll be good to unpack some of those today. Within cryptos itself, again, there's a bit of a divergence, or there is opportunity for divergence. We talk about cryptocurrencies in all its glory. It enables complete autonomy as well as, it can be completely decentralized. It allows for anonymity. On the other hand, you have central banks now thinking that maybe they should get in the game, and they're talking about central bank digital currencies, CBDCs, which actually are exact opposite of what I just said, because they're going to be looking at a very centralized way of providing a similar outcome in terms of where you talk about digital currencies, the ability to have programmable money. It, of course, can be a force for good because it can. The programmable money means you can actually get the exact socioeconomic objectives that you want to achieve. You can actually have a very high degree of control and visibility. But at the same time, of course, the control and visibility are the problems that cryptocurrency set out to solve in the first place, isn't it? So, plenty to talk about. And more broadly, of course, there has been an explosion of talent, interest, resource, money put into this space. And apart from just the hype, there's also been a community. A lot of new ideation and use cases have been looked at. So again, an exciting space. So to delve deeper into these, as Todd mentioned, we have an esteemed panel. We have Sarita from Stripe. We have Chong from DBS. And we have Farid from Maybank. So we have an exciting and eclectic mix of panelists, and hopefully we'll unpack some of these together. So the first question, if I may, I talked about money, and in some forms, just basically to give you a bit of context as to what we're going to delve into. So how do you see money across fiat, CBDCs, cryptos evolving over the next 5 to 10 years? Is it a macro trend? How is it going to impact financial ecosystems for banks and financial services providers and payment services providers, as well as for the users, whether they're corporates or individuals? That is the first question that I want to actually start off with, and maybe I start with you, Sarita.
Hi, everybody. Lovely to be here. That's a million-dollar question, isn't it? What I can comment on is just this rate of innovation that we've been seeing here, especially in Asia Pacific, but I would argue powered in Southeast Asia. And it's been incredible to be part of. We've got a front row seat to that. And it's especially in the area of development of financial services infrastructure for the digital age. And this innovation itself really can provide a number of different paths over the next 5 to 10 years. And ultimately, whether it's CBDCs or, say, commercial stable coins or even appropriately regulated cryptocurrencies, it's all about driving this innovation in service of users, whether they be businesses or whether they be consumers. And so that's really the fundamental question. How are we driving this innovation in service of others? Because innovation for the sake of it, technology change doesn't really mean anything if it's not adding value to the people that we serve. So it really means that whatever the next big thing is really depends on the value that we're adding. And we believe that these new technologies will become part of a broadened portfolio of offerings along with the fiat-based systems that we have today. And what we're really looking to do is partner with banks and other fintechs and financial institutions to drive this innovation in pursuit of this service so that we can drive faster, more efficient outcomes for our users, so we can think about how we impact and drive inclusion and better programmable trading of assets and money movements, whether they be domestic or cross-border.
So technology, service of, I'm going to unpack that a bit more with you in terms of when you say in service of the users, that was ambiguous or was it specific? When you say users, what did you mean?
So it can be, depending on who we are in the financial ecosystem, sometimes our customers are businesses, right? We're B2B organizations, and other times we are in service of our direct end users, which are consumers. So we all have a role to play, but I'm really happy to get into more detail a little bit later on about what that service looks like and tangible ways for us to do that.
Excellent. Farid, what do you think?
Well, I think to extend to Sarita's point, if you ask innovation from banking, this is probably the slowest, right? So, and crypto didn't come around from banking. Crypto came around because people decided that's a better way to monetize things. I'm comfortable with the view that whatever the exchange going forward, the difficulty is regulations, right? Regulatory is key. There's a lot of biasness against crypto today because of the fact that regulations cannot come around to terms with it, not because crypto is bad, not because crypto is fungible. We've proven that technology has been able to provide even more security rather than fiat itself. But I guess the difficulty in the future, there's this, Sarita suggests the next 5, I'm a bit slower. I think I'm a tortoise here. I think it's a bit longer than that because adoption of technology, it's a lot more difficult than we imagine it to be. I think the youngsters are very, very good, but the older you are, as old as I am, trying to get an institution, trying to get B2B or B2Cs to agree to use and change things. It's usually not as easy as it seems. It's just
Thank you, Farid. I only see youngsters here. I don't see anybody old here. So I have a lot of optimism. It's going to be 5 years. Chong, I know that at DBS you've been at the forefront, especially in Singapore, with a lot of experimentation around multiple forms of currency, but also the whole financial architecture. There's a lot of stuff happening on real-time payments. How would you respond to that question?
Well, Sriram, I think I'm not going to put a stake in the ground and say how long and what forms of money. I think that's the heart of your question. But let me answer it from another perspective, right? I think the future of money has to be seen in the context of two things. On one side, like Sarita said, where digital payments is going, and digital payments, there's no question, is getting more ubiquitous. The demand for certainty and speed and cost is there. And the other hand, you got to see it from the perspective of clearing and market infrastructures. And really, when you think about money as a medium of exchange, really lies in the middle of that, right? It has to provide that record of clearing and value transfers, and it also has to meet the needs of the demands of digital payments and corporate collections. So right in the middle of Southeast Asia, as you know, right in the middle of Asia, is this thing that money, even in its incarnations that look similar to fiat, digital payments, is going through rapid change and innovation. There's a lot of real-time payment clearing infrastructures that's built out in Asia. Last count, we counted 13 of them in Asia are doing real-time payments. And then you said in the middle that there is cryptocurrency, there's blockchain, commercial bank-based blockchain, consortium-based blockchain, or what we call permission blockchain, vying to be the medium of exchange for the future. So my view is that there is no question that the technology that blockchain brings, 24/7 availability, the potential for a more decentralized network to lower the cost and the speed of transactions, the potential security and the immutability that blockchain can bring if the network is secured through a proper consensus validation process, the future potential of programmability, the nature that blockchain in itself is effortlessly multi-asset class. You can talk about trade settlements, you can talk about asset tokenization, DVP, FX, PVP, and so the immense potential, I think, of applying these newer technologies to solve, really, the security of clearing and money transfers and the finality of money transfers, and yet meet the need of a burgeoning demand for consumer payments. So I hope I answered that question. I can't put a time frame of when. I can't put a time frame of whether it's going to be CBDC, stable coins, cryptos, commercial bank consortium permission, blockchain networks that will be the future of money. But I think in 5 to 10 years, you're going to see that the shape of the kind of money that we use is fundamentally going to be different from the kind of monies that we have been using or are using today.
Well, 5 or 10, we don't have an answer, but we're
I
definitely
don't want to
headed
get a
in that
guess.
direction.
My CEO would prefer it to be 5. I personally slightly think that it'll be a bit longer and closer to 10, right?
But it was interesting that all three of you actually spoke a lot about technology in the context of the evolution. It was a little bit about adoption, but a lot of the sound bites that I took away were about technology, about blockchain, and also this is a conundrum. I always ask this question. I never get the best answer. I'm sure I'm going to get one today. It's about DeFi versus CeFi, right? How do you see that particular area evolving, and how this dichotomy is going to be resolved? Are we going to see an parallel evolution of DeFi as well as CeFi? I mean, in other words, in an easy way would be crypto as well as CBDCs potentially. And also the use of technology to make real-time payments happen. I think they're sort of all happening at the same time. They are not necessarily one and the same, but if you talk to different proponents of these three areas, of course, it's all underpinned by common or technology which is sort of contiguous to each other. So, Sarita, can I ask you how, when in Stripe, you are obviously, from what I understand, you enable a lot of processes and capabilities for your users, using technology. So how do you see the evolution of technology in your space, but then further out into the CeFi, DeFi? Anything else that you want to cover?
So I'm not sure I will be entirely objective here because Stripe is a technology company. So I believe that in all of our efforts and fundamentally in financial services, we are making a lot of strides and serving our customers and growing and using technology to do so, whether we like to admit it or not. And it's just a question of where we fit in that value chain. But ultimately, as I mentioned, technology for technology's sake doesn't mean anything. So whether it's CeFi, DeFi, all of the different types of topics that we're talking about today, it fundamentally comes back to user centricity, right? And what we all need to be able to do, and it's not even a statement for the future, it's really where we should be now, is understanding our customers' journeys and, where possible, making predictions and ascertaining what their needs will be in the near future and building for that. And so, Farid, to your point, right, we need to be able to move quickly because these consumer journeys are changing very, very fast. And technology is just an enabler to making sure that we're delivering the right services to the right people at the right time. And ultimately, if we are putting the users first, whether they're businesses or consumers, we're understanding what their journeys are. So I see technology, and I have, because I've spent my entire career in tech, I see it as the financial infrastructure behind what all of us are trying to do, albeit in different ways. And that is bringing innovative solutions to solve real-world problems.
Thank you, Sarita. So you are a technology company
Yes, we are.
and you are an enabler.
We are indeed.
Okay. I hear of another bank, DBS also calls itself a technology company nowadays. Chong, what do you think?
You
Well,
tell me.
thank you for the question. I last checked. You're still with DBS. So yeah, I the such a thing, and since time immemorial, right? So for banking and for financial services, and particularly for payments, right? It's been characterized by ongoing technology innovation, and it's for two reasons. Sarita said, I think payments and the transfer of value underpins all human economic activity, right? And it's very natural that in that space you have a lot of competition and a lot of people vying to provide cheaper, better, faster, more available, more resilient payment solutions. And the nature of that payments is not just for payments. Payments can be a profitable business, but more importantly, I think payments also is the anchor product for many propositions, right? Payments is what gives FX, foreign exchange. Payments is what allow you to get data for underwriting, credit for lending. Payments allow you to give financial advice, personal financial management, financial planning that underpins payments data on what people spend on and people do. So payments is a big seg to many other business lines and other activities that financial institutions or technology companies could offer. And so everybody's interested in this payment space. And whether is it CFI, DeFi, which is coming back to your original question, I think the point is, I think not so stark. In all financial activities today, we know that it's a combination of somewhat of centralization and decentralization. Right? Even before blockchain, before technology, it doesn't matter. We have credit. You just use the example of credit intermediation. You have balance sheet credit intermediation, like what commercial banks are. We take deposits and liabilities, we give lending. But the same credit intermediation happens through market-based finance in the capital markets, right? Through bond issuance, money market funds, pools of investment, lending, without doing that. So I think that the new world, like Sarita said, I think technology is going to make a lot of changes, but the fundamental pillars of in which how finance is going to operate and to continue its history of leveraging technology will not change.
Thank you, Chong. And Farid, is Maybank a technology company as well?
I think an institution that does not or have not started on looking at technology seriously will probably be in trouble by now, right? So I think everybody is trying to be first a technology company, then a bank, a technology company, then a phone, a technology company, then everything else, right? So I think the world has changed in that sense. You first have to be a technology company somehow, somewhat. Now, whether that makes CFI, DeFi, or whether what defines that institution, back to what Sarita was saying, it's the end users that drive the engineering, right? So if CFI works, great. If DeFi works better, great. If both have to exist, great. I think from an institution perspective, from a banking institution perspective, we don't have the luxury to say this is how it should be. Because at the end of the day, the business comes from the users, right? So if the corporates say, I like it centralized, it's centralized. If the corporates and the retails and the private bankers and everybody else says, no, I like it decentralized, it will be decentralized. I think the world has changed to a point where every corporate or every big bank does not get to dictate how things are done. It's the users that dictate what needs to be done, right? So we don't get to say this is how we build it. We only get to say what do you like, and we'll try to build that. If we are not as close as what you like, we'll try to get close enough and compromise on something, right? So I don't think there's a perfect answer to that. It's just how quickly we can adapt and how agile we are at adapting to it.
Talking about adaptability, I find that the payment space, just stepping one back from so far distantly into the future to slightly less into the future and closer to the space that Sarita occupies, is real-time payments. We know that that space is getting very competitive. It's also getting extremely, thin on profitability. So at a time of such focus on technology, user experience has to be the best it can be, because otherwise competitive pressures are so high. How do companies such as yourselves look at the conundrum of user first, of course, but also that there are different competitors looking at the same space through very different lens? What I mean by that is, if you're a bank, you're looking at it from relatively long-standing existing business perspective, and how do you maintain the profitability of it? If you're looking at it from the point of view of a startup looking to derive value as a company, then you're looking at it primarily as generating membership or usership. So how do you resolve that conundrum in a fast-changing world of technology? So, Farid, why don't I start?
I like the technology bank.
Actually,
Start first.
that was naughty of me, because I thought since I have, I'll pull out some strategic, insights. But please feel free to, actually, I want to start with: do you think that is a big conundrum to solve for? Let's start from there.
Well, I think what we've found in the last few years is that a lot of things start from what can we disrupt, right? I mean, fintechs. If you think that for the longest time we felt that banks are going to collapse because fintechs going to take over the whole space, right? The payment system, the supply chain, the whole works, and yet it didn't, right? When internet came and digital print came, people thought newspapers was going to be over, but it didn't, right? So not as disruptive as you can be, it does not just kill it overnight. It might, but even Kodak has figured out the new way to survive, right? So in reality, I think there's not so much the difference, but really bridging the gap, right? I think if you're not in that space and you want to be in that space, what is it in that space that's inefficient that you think you can disrupt and be more efficient with? But if you are in that space, I think naturally you have an advantage of knowing what is inefficient and whether you can do something about it. Because, I mean, I think most of us here at work have enough frustrations about what's inefficient, but yet cannot do anything about it.
Well said. Thank you, Farid. I thought that I threw a curveball at you, but you played it very well. Okay, I'm just conscious of time, so I'm just going to maybe not belabor that point. It's actually a tough one, and I think you touch on the right points. Adaptability. So long as you're able to transform yourself and keep with the times, you will figure out a way to survive and thrive. I have a feeling Sarita wants to say something about that.
So I think the way forward for us is to band together as an industry. None of us has the complete solution, but together we definitely do. We have the expertise, we have the courage, we have the innovative ideas to actually move things forward. I think the real value is if we come together, because fundamentally what we collectively need to overcome is the fact that our industry hasn't really been built for the internet economy. And whether we see it closely or not, economies all around the world are increasingly coming online, and a lot of that was powered over the last few years with the pandemic, but these were trends that we were seeing before anyway. And there's a real opportunity for us to come together and partner to deliver those better outcomes for users. And I can think of a couple of examples with my very esteemed friends here, because we partner with both DBS and Maybank. So think about some really common problems that SMEs have. SMEs find it really difficult in certain countries to do basic things like setting up a bank account. And so what we do at Stripe through Stripe Treasury is that we help businesses set up bank accounts with, say, for example, Goldman Sachs or Citi or Barclays and many banks around the world. And that can happen in a mere few hours rather than the many weeks it can take. Or even access to working capital. Right? That's the number one problem that a lot of small businesses have. And a company like Stripe partners with, again, banks to make sure that, instead of this being a process that takes months to do the paperwork, wait for the approvals, then actually get access to those funds, we partner with banks to make sure that SMEs can get access to loans up to about $10,000 in a matter of seconds. Not months, seconds. And we can only do that because we're partnering with institutions like many of you in the room. And so they're just a couple of small but impactful examples of where there's an opopportunity for us to come together.
Brilliant. And I like this whole concept of two things, right? And again, your user focus hasn't changed. You're basically still talking from the point of view of who is the consumer of these services and how do you get better and better and better. And I like the fact that it is a collaborative effort. It needs all of us to pull together. I just love that. I'm conscious of time. I just want to round up with actually an opportunity for each of you to sort of share with us you have shared some of it, Sarita, already, but if you have a broader way of looking at this whole changing landscape, how do you go about designing strategy for your company? How do you look at this emerging landscape? There are so many opportunities, there are so many changes happening, and there are some that you have to prioritize, some you have to let go. So how are you guys looking at it from that perspective? Maybe I start with Farid.
I think for Maybank, we are actually at a very interesting juncture. Sarita and obviously Chong probably know us just as much as we go through our transformation. We've got a new president coming in, trying to figure out and map out the tiger that slept for a long, long time and just woken up maybe 13 years ago. Given where we are in ASEAN, and we are truly the only Malaysian bank that is available across every ASEAN country in that space, connecting to outside ASEAN, that bridge from a technology perspective of where do we help clients to resolve, like Sarita said, especially from working capital. And that's the very reason why I am the treasurer and at the same time transaction banking head, just to work on that working capital solutions. We are of the opinion that the future of banking is understanding transactions and making transactions work. And transactions here is a very broadly defined word. So, because a lot of people feel that transactions, payments and transactions, buying and selling. I think transactions for us is a bit bigger than that. It's beyond goods and services too. And in that geography and in that space, what are we redefining ourselves to be?
Thank you. Chong?
I think we touched on this today. I think try to navigate the future. It's a confluence of many things. You have to, and many things are in flux. We talked about it, that the technology possibilities and the clearing arrangements and societal kind of thinking around the balance of competition between incumbents, fintechs, banks, right? So that's one thing that's changing, the landscape technology. The second is, I think Sarita got it right. There is a huge burgeoning demand for people who have hitherto not be included in the financial system, the unbanked, what it's called, right? And the demand for faster 24/7 internet, or what you would call internet payments. I prefer to call it 24/7 instantaneous fulfillment and settlement need, right? Which is linked to the internet economy, but some parts of it are not. Some part is just a demand for commerce round the clock, right? And always online. And as Farid talked about, business models and the role that intermediaries play in the financial system. Now, but I'm of the view that this confluence of these three things will bring us a very exciting time in the next few years when it comes to payments and transaction services. All right, I talked about it, about real-time payments. We talked about blockchain. DBS has obviously invested, you've seen in Patio, trying to bring blockchain together for wholesale payments and cross-border payments with digital exchange, tokenization, custody of digital assets. But also you see linking of market infrastructures. Singapore Pay Now, PromptPay Pay Now, Pay Now, Do It Now. Indonesia, India links, the linking of market infrastructures. So I think it's all coming together in this part of the world with a big burgeoning middle class, with the demand for real-time payments, internet economy services, this transformation in the technology and market infrastructures, changes in how competition policy, regulatory policy is changing. There I'll just make 2 points. On one hand, I think the regulators are welcoming more competition from fintechs. Just in Singapore, you've seen alone. And for those who are overseas, we've got 2 digital banks given the licenses and going live, right? And there are digital bank licenses being awarded in Malaysia, in other places. So there's regulators are welcoming fintechs, more competition. But on the other hand, if you look at it, very subtle changes of what the regulators are saying, just the MAS about crypto as a speculative asset class. It's very clear that they're also changing policy on that front. What is more subtle is that they're very clearly differentiating payments and banking, right? Under the Singapore Payments Act, that you are a payments company, cannot take customer monies, you have to put in a safeguarding account. You cannot use that for lending. If you use that for lending, you are a bank. You're not a payments company anymore. So I think that this change in regulatory policy, technology, competitive landscape, the burgeoning demand of a 24/7 internet economy, if you want to call it, or a real-time settlement economy, and that competition means that traditional incumbent players and fintechs alike have to adjust to one another, create better outcomes for the community and society, which is really what finance is about. And so as you navigate this, is a long kind of answer to your question, but all these elements and these dimensions has to be thought of and brought to bear as you craft how you're going to innovate, how you're going to develop your next generation of solutions, and how you engage your clients and continue to stay relevant.
Yeah, so it's a complex area to navigate. And so Sarita, how do you look at it? Is there, did you have a very different opinion or take on this compared to how the banks are looking at this space?
I wouldn't say it was very different, rather an extension. And we see just this incredible opportunity, and as I mentioned at the beginning, because of this digitization, but mainly because of the lack of digitization in many places as well. And so here's a really interesting statistic which shocked me when I first heard it, that of all the global commerce, not e-commerce, just commerce, to your point, only 14% of it, 14, was done online last year. So there's incredible headroom for growth. That's exciting. There's also incredible headroom for innovation, because as that number increases, it's not going to just be simply growth. It will have to involve change. And our responsibility as organizations is to remain agile and continue to innovate. And of course, I advocate, and Stripe advocates for technology innovation in the midst of that thoughtful regulation and strong partnerships. And we're seeing such incredible examples of that even in the fintech space. I can tell you a story about a fantastic Singapore company called Choco Up. Is everyone familiar with Choco Up? You should know about them. So they have a solution called Choco Payment, And we were talking about relevance and making sure we were serving our users in the right way. And this is what one of Stripe's customers does, Choco Up. And through their payment solution, they offer access to financing to businesses that have recurring revenue models. And what that means is that those businesses can get access to loans of up to $10 million as soon as 24 hours.
Wow.
Right? And they're able to do that built on the Stripe technology and specifically through Stripe Connect, because at the same time as they're doing the lending, Stripe is helping the businesses that they are funding to increase revenue through payments processing volumes. So there's a role to play for processors, for technology, for solutions that serve users in unique ways. But we're solving very, very large problems. And that has to be done together in a cohesive ecosystem.
Fantastic. Well, on that, unfortunately, I think I already overrun the time I was given. It was so interesting, I couldn't stop myself from asking more questions. But I want to turn it to the audience to ask questions. And I have a hand up already. I'm conscious of time. I hope, Todd, it's okay that we just overrun slightly. Shankar?
Hopefully. Okay. And, one of the things that I do in Singapore is also work as a crime prevention ambassador with the Singapore police. And it's a great initiative. And those of us in Singapore know that there's been a lot of fraud happening in Singapore, especially in the financial markets, if I can call them that. Faster payments, faster fraud. How do you react to that? Especially when you start to look at things like CFI and DeFi, when people start taking control of their own money as opposed to having a process put together. Do you see that as something that and I know, for example, DBS and Stripe, especially in Singapore, are looking at some of these things very closely. But, there is a lot of these cases increasing, and statistically, the last year was doing worse off than this year as far as fraud goes here. How do you react to that?
I have a view, if I may.
Okay, please go ahead.
So, especially as we move to more decentralized models, there's obviously less regulation, less control, and that could increase, the negative aspects of what we were talking about. And a really interesting thing for us is that we recently published a fraud report, and 64% of the business leaders that we interviewed globally said that managing fraud was incredibly difficult for them, both the nature of the fraud as well as the quantum, right? So we have to be able to build systems that balance this innovation and decentralization with the fundamentals of a solid and healthy financial ecosystem. For example, around trust, right? And so I 100% agree with you that the kinds of solutions that we need to come together, whether they are people, processes, or technology, we need to be able to coordinate all of those across multiple companies, multiple ecosystems, to really clamp down on that and protect the interests of our users.
There are so many ways that this could go, right? This particular, you could have a separate panel discussion just on fraud mitigation. But thank you for that question. Sam?
Hey, thank you, panel. When I look at a US dollar note, it says, "In God we trust." But of course, we don't trust it because of that. We trust the Federal Reserve that is standing behind it, and same for, I guess, the Singh dollar MAS. My question is this: do you, as a panel, looking into the crystal ball, I think there's a difference between delivering and settling payments faster versus the actually having a decentralized or DeFi currency by itself, which is delinked from a central bank standing behind it. My question is, what do you see happening more in the future? Is it a CBDC or a fiat currency that is backed, it is digitized and backed by a central bank, being delivered faster into various digital ecosystems? Or you actually foresee something like Bitcoin? So El Salvador and I think Panama has already adopted Bitcoin as legal tender. Do you see that happening where the central bank then loses a little bit of control? And the related question I have is, what then happens to M1, M2, M3, money multiplier, economics and liquidity in the country?
So I have a simple question in return for you. Do you want your drinks or not?
He asked such a
We can answer that over drinks.
yeah, such a complex question, but let me take a stab at it, and I think that we can go for drinks, right? I think that Sam, you asked the right question. That we have to separate three things. We have to separate the payments form factor and the payments itself from the money, from the technology, right? So the blockchain is a technology, right? Hub and spoke messaging is a technology. Payments is payments, but you ask the question is original, the future of what is the money. And I'll take a step at it and I'll say that if today when you look at it, that we call many things fiat, but many things are fiat alike, they are not fiat. Wallet in Stripe wallet, we call that fiat. That's not fiat. That is a liability of a digital wallet. We call commercial bank liabilities when I pay you fiat. That's not fiat. That happens to be commercial bank liabilities we're transacting against that is substitutable against central bank digital. What is fiat is really in God we trust, the note, right? That is guaranteed by the central bank. That theoretically is a fiat, or if you look at a closer substitute, central bank liabilities, CBDCs. Now, the relationship between, what I'm coming to is the relationship between private money and public money, which is really the heart of the question. Will the future of money be purely public money? And if it's going to be private money that's substitutable with public money, and what forms of private money is going to do? We should talk about it over drinks, because everybody, if you ask that, would have a different opinion about what the balance and the right balance for public money and private money should be. Right?
Okay. I know there are probably more questions. I know Neil had raised his hand, but I apologize. I think we should have the conversation continued later in the evening. Thank you very much, panel. I learned a lot of stuff. I hope you did. It was a great conversation. And thank you very much once again for being here. Thank you all.
Thank you.